Welcome to Pro News Flash. Has the gold bubble burst? What can we expect from precious metals? Let's dive into the latest events. What goes up must come down. It was Black Friday for precious metals on January 30th. Gold and silver saw their worst daily sell-off in percentage terms since 1985. This coincided with Donald Trump's selection of the new Fed chair, Kevin Warsh, whom the markets considered the most hawkish of all the candidates. In fact, geopolitical unrest and trade turmoil have turned precious metals into a speculative asset. Venezuela, Iran, Greenland, and tariff threats from the White House have pushed gold volatility to its highest level since 2008, the height of the global financial crisis. In a rare reversal, the metal has become more volatile than Bitcoin, a phenomenon observed only twice in the cryptocurrency's 17-year history. The first instance occurred in May last year, amid escalating tariff tensions. Gold rose too fast in January and was bound to hit a brick ceiling sooner rather than later. The formal trigger was Kevin Warsh's nomination as the next Fed chair. The former FOMC governor believes that the main cause of inflation in the U.S. is the printing press and intends to combat high prices by reducing the balance sheet. This could lead to higher Treasury yields, which is good for the dollar and bad for precious metals. Despite the collapse of gold, Wall Street remains bullish. Deutsche Bank has confirmed its pre-Black Friday forecast of $6,000 per ounce in 2026. JP Morgan believes that this mark will be reached in the second half of this year, amid growing demand from investors. Interestingly, ETF reserves remained stable on January 30th, despite the most spectacular sell-off of precious metals in more than 40 years. So, what's next? If the gold bubble has indeed burst, the gold price could fall to $2,000 to $3,000. But the most likely scenario is that it will be supported by geopolitics and central bank purchases of bullion. On the contrary, a strong dollar will hinder the precious metal. Stay with Pro News for more updates on events in the financial markets. Like, share, and subscribe.